Hi, today is Saturday, April 6, 2019. Taking a look at the S&P 500 to talk about the possibility of a head and shoulders pattern, or are we getting an early signal that we're not going to be making a head and shoulders and that we're going to actually break out? Well, if you take a look at the S&P 500 over the course of the last year and a half, we see we came to an original all-time high here at the start of 2018, up at 2872, and we fell back from there. And then we made the long slog back up, taking out that previous high and making what still stands as our all-time high here in September at 2940. Well, then you know what happened after that. We sold off all through Q4 until we finally made a low on December 26th, all the way down here at 2343. What really looks like happened is that this was our head and shoulders right here. This triple top that happened here in October, November, and December was really the fail point, and the break of the neckline was right here at this original low set at 2603. And this move downwards was nearly a doubling down of this range from the all-time high to this 2603 level. And now that we've taken that out and we're moving our way back on up towards this all-time high, it looks a lot more like we have an inverse head and shoulders that we're working out right here. Well, here's the problem about a head and shoulders altogether, is that a head and shoulders is usually the product of a drawn-out process of two inverse head and shoulders smashed right against each other. And the head of that are the two failed breakout points, or the two stopping points of the inverse head and shoulders. So here you would see one inverse head and shoulders and the high, and then we're falling down. And if we can't get back up to take out that previous high, then this is a failed breakout of an inverse head and shoulders pattern. And the market behavior under the surface in this is that you had this bullish run up to here and sellers came in. And then when we got up to the point here, climbing off of the bottom, you had a group of buyers that was willing to buy above that previous high, but only just so much. And then once we broke that previous high, we cascade down again. And then as we come up here, we're just breaking out above that original high that we broke out above here. If we get up here and we cannot make a higher high, people lose confidence and we cascade down again. And so that is one inverse head and shoulders breakout, followed immediately by another inverse head and shoulders breakout that fails to make that breakout higher. Well, as you can see, we've already taken out the top of the left shoulder, so that's strike one against the overall head and shoulders pattern idea. Here are some other things that we can do to sort of figure out whether we can front run a beat of this pattern, a foiling of this head and shoulders pattern, or should we heed the warning and get out now? If we take a trend line and we measure traditionally how you judge an inverse head and shoulders pattern, the breakdown of a head and shoulders pattern. Bear with me. I hate it when I talk over myself like that. If we just simply draw through here from this original high to this low that we made, we see that it makes for a perfect touchback to the trend line that we had, the downtrend that we had made going into this all-time high here. What if we turn this into a channel? Place it at the all-time high, and we see that what we've done here is we've broken out of this channel, we've come back down to somewhat backtest it, and we're moving up now, which means that if we take out this high, we're highly likely to sustain at this time and move on higher. Let's try drawing this again from another standpoint. What if we had a much more benign breakout line, something that only took us from here to here? Only took us from the top of the left shoulder through this original low, this original first low that was made in the sell-off here. We take this and we redraw this one as a channel. And once again, what have we got going on here? We can see that we have a breakout touch back, and we are moving on now. What if we try something even more benign than that? I'm really trying here to find something bearish to say. What if we take this very, very first low that was made in the sell-off? This very first low that was made on October 11th. What if we take that one and look how this line now passes through this little swing high that we made into June of 2018, fell back from, and then broke out. That really looks like a substantial line, doesn't it? Let's take that one and redraw it as a channel. Set up our point. What do we have? We see that we broke out once. We came back in, tested within it. And what do we have here? We see that our current week that we just traded was a big breakout and a breakaway from this. This would probably be the most benign line that I could draw for this head and shoulders pattern. This really looks like a breakout. It looks like it's highly likely that we're going to take out the all-time high and move on above there. However, it could be a process. It could take us a while. We could spend some time chopping back and forth. We could even retrace all the way back down to this line here. But what do we have on our side? Well, we have this 50 and 200-day simple moving average cross on our side, for one thing. And you can see that when the cross down happened here, this led to this final cascade down. Well, now that we have the cross up, what's to stop us from having the same amount of range drawn that we got from the cross down to have that on the cross up? What if we measured something like that? What if we measure from where this cross happened on down to where the low was finally set? And we measure that move out. What do we get? Bear with me now. It's going to be an exciting reveal, isn't it? Ooh, let's see. I bet you've got to get to like 3,300, something like that. Nope. You would have to get to there we go. We would have to get to about 3180. 3181 to be more precise. Okay, so 3181. And we call that a measured move target. 3181. There you have it. That would be the target. Now, I'm not saying that that's going to happen anytime soon. This might not even happen for the rest of the year. This might take until all the way into fourth quarter, as we get closer to the elections. Of course, it only took from December 4th to December 26th for this move to happen down, and for us to make the breakout back above it to February 8th. So if we took all that time from December 4th to about February 8th, that would give us about 2 months. In 2 months, where would we be from where we're at now? Say, right now. What if it just started from right now? That would take us till maybe into June. But in any case, that's not the point of this video. I hope that you learned something from this about how to draw head and shoulders patterns, how to draw the targets for them, or how to judge how to concede that maybe we just have to accept that prices are going to be going higher and that the chart is showing us that. Anyway, hope you enjoyed it. Good luck and good trading.